Hello, fellow traders. 'Tis I, the Rumpled One. Monday, July the 9th, year 2018. Let's talk trading. Why use lines? I got a comment last week on Friday's video. Somebody said, why use lines at all so long as you don't buy at the high of the day and sell at the low of the day, you should be able to make money. I had to ponder that one for a while because, at first it kind of sounds like somebody's being a smart aleck, but then again, I thought, no, that's really a good question. Why use the lines? Well, you know, back around the early days of the stock markets and other markets, they didn't have charts. They basically, in the stock market, they read the tape. And even before that, they would put up the price on a chalkboard and people would make notes. And then they have to keep all these numbers in their head or on the paper and try to look. So, one reason to use a line is it's quicker. I mean, you can look at a quote unquote naked chart, but it's like if you're looking at an hourly chart, yeah, you could see the high of yesterday or maybe the high of the week before or the current week, but you have to do a lot of interpretation. A lot of, oh, there it is. Oh, there it is. Oh, where was it again? As opposed to if you just have a line plotted, there it is. So, that's one reason. Another reason to use lines is because if you run any frequency distributions or other types of statistics, well, if price is at this level, chances are it will go either this way or that way. So like with the wick zones, if it's in between those two lines, chances are it's going to, escape those two lines. Or if you even use the Einstein lines, okay, here's price when I signed on. And so chances are by the time I sign off, okay, we just signed on, I signed on there. And by the time I signed off, look where price went. or look where price went. You see, relative to there. I mean, that's just how it is. I mean, do I really need these lines? No, but does it kind of make it easy? Okay, remembering where I started. See, do I want to keep this number in my head all day? Or it's just like, does it even matter what that number is? No, this is where I started. So you see price came back here, and it's just like, boom, it went up there. So that's a reason to draw the lines. So are they necessary? I mean, no, they're really not necessary, but they just make things a little bit easier. It's kind of like this candle color multimeter indicator that I made over a decade ago, right? Is it necessary? No, but it's like I can see real quickly here without even looking over here. It's like, okay, we've got a green H1, a green H4, a green day, green week, green month. Okay, and anything below that, oh, from this half hour, we're going the other way. So what would that be called? A pullback. So, the line is just a tool. Do you need that tool? Do you want to use that tool? That's up to you. So I thank you for that question. I think it was a good question. It's one of those questions where it'd be easy to brush aside, but when you stop and, put your ego in check and say, okay, let's think about this question, let's ponder it a while, and let's see if there's something to be learned. And let's move the chart back here. Okay, so why use lines? Hopefully I've answered your question, and maybe you have a retort, and feel free. Um, you know, when we have these civilized discussions, hopefully we all learn something, can improve. Sort of like with money and risk management. If we talk about this, maybe, somebody learns how to improve because maybe they've been trading with a position size too big and they keep getting stopped out. Or maybe they're not placing their stop loss in a smart area and they wind up getting stopped out. So, it's things like that that are really simple, but you have to master them. And we can see since yesterday's video, we now have a green month. And all but 2 gaps filled. So if you guys got in late yesterday, there was I think there was 4 or 5 gaps to be filled. And hopefully you took advantage of those. And on the daily, we can see we're in that daily wick right here. And if you look back here, we're in the weekly wick also. So we haven't broken out of the high of the previous daily session's high. So we might look to do a whole low reversal trade. And we've got 5 pairs over 100 for the daily range. The yen anemic at 36. That is just really anemic. Okay. But we've got these pound pairs, a lot of movement there. Interesting, the beast has the least movement out of the 5 over 100. I mean, pound dollar moved more than pound yen? That's surprising, isn't it? And you can see here, we took out that daily pivot. Here's a nice buy zone trade. So why do we use horizontal lines? Why use lines at all? Just so we know where buying opportunities are, or selling opportunities, trading opportunities. Direction is to trade, like the pivot point. Sure, we could put this number in our head and okay, and price is here. Okay, yeah, so we want to trade towards it, but why keep it in our head when we can just look at a chart? It's just so much quicker. Ease of use, speed, it's a tool. Once again, no rat zone. Maybe I should change this indicator. If the range is under whatever minimum range you put, it just doesn't even plot it. That's not a bad idea. And once again, we took out the daily pivot. We've taken out the weekly pivot. We've taken out R1 on the daily. Here's our weekly R1 up here. Took out the pivot. And what do we have here? We have price action. Now, you see the 3 ball, green at the line, didn't pay off much. 1 ball, red at the line, didn't pay off much. But then green at the line, and you got paid. And the same thing here. Green at the line pays, red at the line pays. Right there probably was a scratch trade. Why? Once again, you see here, if you look at the low, you see price went and came back below that right there, it's just like, nope, it's not doing anything. So that should have been a scratch trade. And a scratch trade is, 0 or plus or minus 1 or 2 pips. I mean, you just basically just scratching a trade. I would say you probably would scratch that within a pip. And wick zones, once again, price doesn't like staying in the wick zone. We've got a nice range here, about 20 pips in this one. So price might wind up closing within this wick zone today. We'll just have to wait and see. And we've got a holo set up right here. 110, 68, 69. Look for a short. And you can see price is pretty flat at this level. See, we don't have to have lines. We could just sit here and read the tape. But I mean, then you'd have to take notes and notes. And what if you wanted to trade more than one pair? I mean, would you really want to have to mark down those numbers, the highs and the lows? I sure wouldn't. Let the computer do the work for you. And let's see, what do we have here? We've got a inventory reduction bar trigger right here. It'd be good for about 20 pips. And you can see here we've got line crosses, the monthly open up 13, the daily or the previous daily session open here 11. Once again, the Einstein lines. And why do I call it Einstein? Simply because we're just saying, what is price up or down relative to when you opened up the chart? Because in a way, nothing else matters, because this is where you're starting from. So is price going up or price going down? Doesn't really matter. Is it going up or down in relation to anything else? Because this is where you have to trade from. The daily open could be down here, right? In which it is, I would imagine. See, it's 30, so that'd be, 39? So yeah, the open is down here. So it doesn't really matter because you couldn't buy at this price. So from here, you would have shorted, but it'd still be above the open. But you could see here, it looks like a scratch or just a couple of pips. Fact being is, you wouldn't have taken that trade to the long side based on when you started, if you're using this as your reference point. And just to show you right now, the frequency distribution of high minus close. Now you can see here we're just 2 pips off the high. So we got a 90% historical chance over the last 100 days. It's the end of the day, this number will be bigger than 5, bigger than 10, 82%, bigger than 15, 72, bigger than 20, 62. So you see here, you're within 2 pips, but price could go higher. But we don't know that, so you have to trade what you know at the time. So if this is the high and the price reverses, you have a good chance of making a profit. So that's it. Why do we use lines? Because it's a tool, makes things easier to see, a lot less to keep track of in your head or on paper. So once again, I really hope I've answered that question. I tried to treat it respectfully. So, fellow traders, always remember, never forget, it's not what you trade, it's how you trade it. Let's go drain the banks.